Well, investors are eagerly awaiting the latest Fed minutes coming out this afternoon. Now, they'll be hoping for a more dovish tone from members and a lean towards a pause in interest rate hikes for the September meeting. But some recent quotes from voters on the committee tells us that the hiking may not be over. Minneapolis Fed President Neil Kashkari saying during an interview, quote, "I'm not ready to say that we're done. Inflation is coming down. We've made some good progress, but it's still too high." And San Francisco Fed President Mary Daly telling our very own Jennifer Schonberger there's still more work to do. It would be premature to project what I think would happen because there's a lot of information coming in between now and our next meeting. Joining us now is Omar Aguilar, Schwab Asset Management CEO and CIO. Good to have you back on the show here. So give us a feel of how investors are feeling here. We're getting some of this Fed speak ahead of what we are getting from the official FOMC meeting minutes here. How are investors feeling right now about this picture that they're in?
Well, thank you. Thanks for having me. And the minutes today will be an interesting, take on where the Fed officials may be thinking for the, in anticipation of Jackson Hole, but also in anticipation of their September meeting. A big part of these, ends up being what the tone of the minutes might be. On the one hand, you will probably hear or read on the minutes that there is this encouraged optimism that there is disinflation, that inflation picture starts to just work itself down. They will be very cautious in the way that they describe that as to say, well, there's still work to be done. They don't necessarily want to say that this is victory, and therefore leaving the door open for potentially still working on that. I think the market will be looking at, and the market is already thinking that there will be a pause, coming on in September. But I think as we continue to see on any given day, new information, the Fed officials are also tracking that, and again, trying to leave the door open for what they may want to do. So a lot of what I think the minutes will reflect today is consensus view from the officials, and whether or not they're leaning more dovish or whether or not they're just going to become incredibly neutral, just leaving the door open for potential more work on interest rate hikes.
And as all this information continues to roll out, where we're seeing some interesting calls here, Vantage Point Asset Management's Nicholas Fress suggesting a hard landing and a correction in the equity rally coming up in the fall as some of the realities of slower U.S. growth, as well as some of these seasonal factors start to kick in. Is that how you see it as well?
We're not as bearish in that circumstance. I think what we're seeing here is, a very unique cycle that we have seen economically and just markets as well. And, we have gone from calling a recession and a disaster from the last 18 months. I think the most pronounced recession has been called pretty much every quarter since, the middle of 2022. And I think, what we have seen is this concept of rolling recessions that in our concepts, we're now feeling that we're in this, area of rolling expansions or rolling recoveries. And if you think about it, even just the recent, housing data this morning, it still continues to see that while the housing, market was in pretty serious, recessionary territory at the end of last year, over the course of this year has started to recover, even in the case of having incredibly higher mortgage rates. So we see that component of potential stabilization, that we see that these expansions or these recoveries continues to be in different parts of the market. A lot of what I think we're seeing is this competition between slowdown of the economy, as well as just the potential, how fast these inflation numbers come back. And at the end, the big, question mark is how much the consumer can maintain that leadership of maintaining the economy growing at the pace that we're going now.
And that is a question that we keep asking ourselves. We keep saying, talking about the strength of the consumer, and then we see this retail sales data, coming in hotter than expected as well. But then when you look at what the stock market is doing, I mean, we have Michael Burry of Big Short fame with this $1.6 billion bet on a stock market crash coming up this year. Do you see anything that's really going to push the markets into correction territory as you look ahead?
Well, great question, and we gotta understand that a lot of the earnings pictures that we have seen and a lot of what the market fundamentals run basically end up being very tied with what the economy is. And so far, if you look at the trajectory of GDP and the trajectory of earnings, they have been very, very consistent. So when you can actually see that, yes, in the results that we had on the second quarter earnings, we saw that contraction was the third quarter in a row of contraction, which was consistent with the slowdown of the economy, but still, growing at a pretty good pace. In fact, the results were pretty consistent, beating estimates. Yes, there was an erosion of earnings, but there is not a capitulation of earnings was just a disaster. So when you look at those and when the market looks at fundamentals, a lot of what the earnings, produce and what the forward-looking earnings may look like is in certain parts of the market, things are expensive, but in the general sense of the market, there's still a lot of opportunities for things to look, pretty attractive. Now, what I would actually say, though, which is, part of being cautious and being, in a way, taking a more broad view of the market is we go back to look at the 5 C's. And that when we say the 5 C's is things that are actually going to matter for the fall include China, which is a significant, new information that we have seen, especially in the last couple of weeks. The consumer claims to just get a sense on the labor market, the credit market, which is going to be an interesting thing to continue to monitor over the next couple of months, and of course the consumer, activity. So when you look at those 5 C's, that is something that we started seeing at the beginning of 2022, they're coming back into vogue as to see what are the things that we need to continue to watch to understand where the market will go from here.
That's great. We'll be keeping track of those 5 C's. There's, of course, a lot of investors trying to sort of pass through all the data that's coming at them. We do appreciate you joining us with your insights, as always. Omar Aguilar, Schwab Asset Management CEO and CIO. Thanks so much.